Hey everyone, and welcome back. Today, we are diving into the fascinating world of big money moves and asking a crucial question. What happens when a major player in the investment game decides to go all in on one of their key assets? We are talking about a move that signals massive confidence, a deep strategic commitment, and potentially big things for the future. We are shining a spotlight on AIMS Financial Group, or AFG, and their significant investment in AIMS APAC REIT, and trust me, this isn't just another boring financial transaction. This is a story about strategic foresight, a bit of opportunistic timing, and a powerful signal to the entire market. So, let's break it down. If you haven't already subscribed to our channel, please subscribe to our channel. Your support truly makes a difference, enabling us to produce more stock and fundamental analysis content. But first, a quick disclaimer. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. The big news dropped on July 14, 2025. AIMS Financial Group, who are already the long-standing sponsor of AA REIT, made a major power play. They acquired an additional 7% of AA REIT's units. Now, that might not sound like much on its own, but it pushed their total ownership stake in the REIT to a significant 18.66%. That's nearly 1/5 of the entire REIT. They bought about 57.16 million units. And get this, they bought these units for $1.19 each. This was through something called a married deal, which essentially means it was a pre-arranged, off-market agreement. Think of it like a private sale rather than buying on the open market. And who were they buying from? Another big name, ESR Management. Now, this adds an interesting layer to the story. ESR Group was actually going through a privatization, which often means they need to reevaluate their asset portfolios and sometimes free up capital. So, what you had here was a win-win. ESR could streamline its holdings, and AFG could deepen its commitment to AA REIT. It wasn't a competitive fight. It was a mutually beneficial alignment of interests. So, why is this such a big deal? Why would a company invest so heavily in one of its sponsored entities? Well, George Wang, who wears two very important hats as chairman of AA REIT's manager and executive chairman of AIMS Financial Group, put it perfectly. He said this increased stake reflects AFG's confidence in the REIT's long-term growth potential, the management's execution capability, and our unwavering commitment to creating long-term value for all unit holders. Russell Ng, the CEO of AA REIT's manager, echoed that, calling it a strong endorsement. But here's the kicker, and this really speaks to AFG's strategy. The acquisition price of $1.19 per unit was a notable 10.53% discount to AA REIT's closing price of $1.33 on July 11, 2025, just before the announcement. This isn't just a vote of confidence, it's an opportunistic investment. If AFG just wanted to increase their stake, they could have bought units on the open market. But doing a large, discounted married deal? That screams that AFG believes the intrinsic value of AA REIT is actually higher than what the market was currently pricing it at. They saw a chance to grab a substantial block of units at a price they considered very attractive, signaling to everyone that they have strong conviction in the REIT's future. And this deep commitment isn't new for AFG. Their relationship with AA REIT actually goes way back to 2009. Back then, AA REIT was known as MacArthur Cook Industrial REIT, and it was in serious financial distress. We are talking its market capitalization had plummeted to around 60 million Singapore dollars. But AFG stepped in. They acquired the manager, recapitalized the REIT, essentially saving it from the brink, and helped transform it. The REIT's market cap soared to 315 million Singapore dollars by March 2010. This history shows AFG isn't just a passive sponsor, they're a turnaround specialist and an active value creator. They've proven they can navigate tough market conditions and build significant value. In fact, in 2019, AFG solidified its control even further by becoming the 100% owner of the REIT's manager. So, this latest stake increase is really a continuation of a proven, hands-on strategy. So, how did the market react to all this? Despite the significant discount at which AFG acquired the units, AA REIT's share price remained stable to slightly positive. On the announcement day, July 14, 2025, the stock closed at $1.34, a slight increase from $1.33 on July 11th. The trading volume that day was huge, but that was mostly the married deal itself, not a broader sell-off. This stability shows that the market views AFG's increased stake as a strong positive signal of commitment and future growth potential. Investors seem to trust AFG's long-term vision, and this confidence is well-founded. AA REIT itself has been showing robust operational performance. For the full 2025 fiscal year, they reported a 2.6% year-on-year increase in distribution per unit. Their Singapore portfolio saw an impressive 20% rental reversion, with industrial assets leading the charge at over 44% in the last quarter of FY 2025. They also maintain healthy occupancy rates at 97.3%, and they've been proactive with their debt management, lowering their overall leverage ratio and increasing their fixed-rate debt to 85%. This makes them more resilient against rising interest rates. Plus, they have exciting asset enhancement initiatives, AEIs, underway that are projected to yield a strong 7% net property income. What does all this mean for the future of AA REIT and its unit holders? Well, AFG's deeper commitment means enhanced stability and greater financial flexibility for the REIT. With a stronger sponsor, AA REIT might gain improved access to capital markets and potentially secure more favourable terms for debt financing. This reduces perceived investment risk and makes it easier for them to fund future growth. This dual role, where AFG owns 100% of the manager and has a substantial direct equity stake, creates a unique governance structure. Their financial interests are now even more tightly aligned with the REIT's performance. This means fewer conflicts of interest and faster, more decisive strategic actions. It positions AA REIT for potentially more aggressive, yet prudent, growth. This isn't just about short-term gains. Research suggests that highly committed sponsors like AFG may prioritize long-term asset value growth, even if it means some near-term impact on distributions due to capital raising for big projects. This signals a patient capital approach, aiming for compounding returns over time. This whole move is perfectly aligned with AFG's broader, counter-cyclical investment philosophy, where they often acquire undervalued assets during market weakness. So, in conclusion, AIMS Financial Group's increased stake in AIMS APAC REIT is a powerful statement. It's a deliberate affirmation of their profound long-term commitment and unwavering confidence. This move reinforces a critical sponsor-manager alignment that has historically been the cornerstone of AA REIT's success and impressive turnaround. For AA REIT, this means enhanced stability, greater financial flexibility, and stronger backing for future growth initiatives. It sends a clear signal to the market. There's a unified vision for long-term value creation here, fostering greater investor confidence. This strategic, value-driven investment by a proven sponsor, combined with AA REIT's strong operational performance, positions the REIT incredibly well for continued resilient income generation and promising capital growth. What do you think about this kind of strategic investment by a major sponsor? Does a strong, committed sponsor like AFG make you more confident in a REIT's future? Let us know your thoughts in the comments below. And if you found this breakdown helpful, don't forget to like this video, subscribe, and hit that notification bell so you don't miss our next deep dive. Thanks for watching, and we'll see you next time.